Hello and welcome to today's webinar, 2023 Cyber Endorsement Change, edition of Cyber Deception Coverage. This is presented by both Cathy Bryant, she's a manager in our Consulting Services Department, and myself, Anthony Passalacqua, and I'm a cyber consultant. So the first thing we wanted to cover was cyber insurance coverage with TMLT, LSA, MPL policies. The first area is coverage for insured's direct loss, and that is first-party loss. That includes such things as ransomware payment, data and system recovery, business interruption, reputational harm, and a cyber event, which is defined as any privacy breach or cyber attack. Coverage for the insured's direct loss includes such items as cyber deception. That's the main focus of our webinar today. This includes financial fraud, phishing attack loss, and telecommunications fraud loss sustained because of social engineering event or impersonation attempt, proof of loss, and coverage for claims brought against an insured. Items include privacy and network liability, regulatory fines, payment cards, and media. And for a complete definition, please go ahead and look in the bottom left-hand corner. You will see a file that you can download that has all of those definitions. Cathy, can you walk us through common use of ACH payments?
Sure. So we all probably have done some sort of electronic payment, whether in our personal life or whether in our private, in our business life. Today we're going to focus on two primary issues that are seen with the cyber deception. The first is employers depositing money into employees' checking accounts, such as payroll, uh, and businesses paying suppliers or vendors for products or services. So, electronic funds transfers, in this case, specifically for direct deposit, work basically like this. The workforce member requests direct deposit. That request is usually sent by email or some other electronic media to accounting or payroll, who receive the request and process it as a routine, either new or change in routing instruction. That information is communicated to the financial institution, and the payroll is deposited in the workforce member's bank account. What happens with fraudulent instructions is that there is an imposter who poses as a workforce member, and they request the change in the direct deposit. The fraudulent instructions are sent by the imposter or the cyber threat actor. Employees unknowingly in accounting or payroll receive the request, and then they make those changes in their routing instruction, which is communicated to the financial institution. And instead of the money going to the employee's checking account, it ends up going to the imposter or the cyber threat actor. The employee is going to pick up the phone when their paycheck is not in their bank and call the payroll or accounting department, who is going to notify the privacy and security officer, who will do the incident will then be reported to cyber insurance. And prior to July 1st of 2023, under your embedded cyber insurance or endorsement, the coverage, there was no coverage for fraudulent instruction under cyber deception. And so therefore, the coverage decision would be that the incident is not covered under the the policy. So here's what is happening now. With the addition of the cyber deception coverage, which is the insured's loss of money or securities directly rising from a cyber deception. And there are three covered cyber deceptions. One is fraudulent instruction, two is funds transfer fraud, and three is telephone fraud. One thing I do want to point out is that the change in your coverage is only effective when your TMLT or LSA policy is renewed or new policies issued on or after July 1st, 2023. So in the most extreme example, if your policy does not renew until June 30th, 2024, you will not have coverage until then. And a little later in the program, we're going to talk about a way that if you are concerned about cyber deception, that this can actually be taken care of, or you can actually get coverage ahead of time. So when it comes to fraudulent instruction, the definition is the transfer of money, payment, or delivery of monies or securities by an insured as a direct result of fraudulent instruction provided by a third party that's intended to mislead you. So, in other words, the imposter or the cyber threat actor that sends the misleading email with false instructions for routing of a payment, that is the beginning of how the process works. One important caveat of fraudulent instructions is that your coverage may not, your coverage will not include losses that arise out of fraudulent instructions in which you do not first authenticate the transaction. So that means if you have received an email, you can't email the person back and say, hey, did you mean to change your routing instruction? You must either make a phone call or if there's someone in the office with you, have a face to face conversation with that person to verify the authenticity of the request. There, a- there are a few other examples of things that are not covered under fraudulent instructions, but they are extremely rare and in all likelihood would not apply. So your typical scenario is that the imposter or the cyber threat actor sends an email to the practice with instructions to change an electronic funds transfer. Well-meaning employees follow the instructions and make the change. And the result is that money is sent back to the threat actor or the imposter and not to the intended recipient. This is an example of an email that might have uh, a, a change in instruction. This one is from Dr. Money. If we look closely at the email, you can see that the name is misspelled or it is a fake or spoofed email address so that the intent is for the employee not to even catch this. This is sort of your basic phishing type of steps that you should be taking as far as misspelled names or looking for fake emails. And again, the money would flow out of the organization. Another specific type of fraudulent instruction is business email compromise. Tony, would you like to discuss this?
Yeah, I'd like to. So I bet a lot of our participants are trying to figure out what business email compromise is. And business email compromise is a type of phishing attack that targets organizations with the goal of stealing money or critical information. So it can be a relatively complex process, but just to try to simplify everything, the way that it really works is as a cyber criminal poses as a company executive and emails a finance person. Finance receives that request and then sends funds to the cyber criminal's account, and then the cyber criminal will receive that money. So here's our next example. For a lot of our participants, go ahead and just look at this example here and see if you guys can see anything that looks a little off. I'm going to go ahead and read the body of the email. So, good morning. I'm out of town and will be tied up most of the day. Our vendor, who we have done business with for years, emailed me saying we have not paid our latest invoice. See attached. Can you process the attached today? Just email if you have any questions. Okay. So if you've noticed, a lot of the information that you're looking for isn't necessarily in the body of the email, it's in the from category in your email. So see you later is the name of the individual, but if you look at the email itself, it's misspelt. So there's an extra T and company is misspelt as well. So how to prevent falling for fraudulent instructions? Well, the first thing is prevention starts with your employees. You must have a written policy on verification of EFT changes, and the policy must include all changes must be authenticated by a method other than the original request to verify the authenticity or validity of the request. What that means is if it comes in an email, it must be confirmed by another means. So phone calls to cell phones, company email or company phone calls in person, those would all be great ways to confirm it. The last thing you want to do is respond back through the same email because if it's compromised, you're just perpetuating that cycle. There's no way to really break it. Make sure that the document how this was done, and then what to do if it cannot be authenticated. So, for instance, you may say, if I can't authenticate it through these other means, then we will hold off until we can. So, failure to authenticate the change may void your cyber insurance coverage. It's very important to have something in writing. So I bet a lot of our participants are trying to figure out if we have any sort of samples, and we do. So again, on the bottom left-hand corner, we have a sample that you can download. And in this specific instance, this has a very good example on the right-hand side. It's a two-slide portion of this. And the big thing to know is that if you're going to utilize this, make sure that you cater it to your practice. It's just not a copy and paste. You want to make sure that it follows exactly what you're doing at your location. So some examples of misdirected funds. So a fraud email was sent to a known vendor with an invoice internally. The invoice is processed using billin.com for payment. The email stated that the bill hadn't been paid and demanded that the bill be paid that day. The email included the payment information. Apparently, the email from the vendor had been hacked and a spoofed email had been sent. The insured sent $30,000 to the fraudulent account. And so, what we sometimes see, as you can see in the second example here, is that there was a business email compromise and it was close to the same amount of money due to a spoofed email. If cyber criminals find something that works, they tend to replicate it. Another example is employees requested to allow remote access to their laptop. They were posing as Geek Squad. Once on the network, the threat actor sent themselves $10,000. Another example we have is a physician's personal email was hacked. The threat actor sent a spoofed email to the payroll to change the existing bank routing. The result was $68,000 misdirected to the fraudulent account. And finally, a practice manager received an email from one of the physician's Gmail account. The email message requested a change to their direct deposit account in which the payroll check had been deposited. The practice manager emailed the physician the direct deposit form. The form was completed and returned, and then the practice manager sent the completed form to payroll. The doctor noticed that he had not been paid. The total amount transferred was around $22,000. So the big thing that we want to draw into this is that each one of these examples, there was no authentication process. Everything was done through email, and it allowed those cyber criminals to continue to utilize that as a way of transferring fraudulent funds to themselves. Kathy, can you go over funds transfer fraud?
Certainly. On the surface, funds transfer fraud looks a lot like fraudulent instruction, with one big difference. In fraudulent instruction that Tony was just describing, the misdirected funds instructions are sent to the practice. With funds transfer fraud, the misdirected funds uh, emails are sent directly to the financial security or financial institution. You, as the bank uh, or client, have nothing to do with any of the transactions. So it's the transfer of or payment or delivery of money or securities by a financial institution as a direct result of that fraudulent instruction without your knowledge. The bottom line is the originator is the cyber threat actor, and the cyber threat actor then is the beneficiary of the funds. In most of these situations, the financial institution is going to have a cyber policy or a commercial crime policy that is going to cover this situation, and that your insurance coverage is not going to be necessary at all. The other rarely occurring cyber deception is telephone fraud. Telephone fraud is toll or line charges that are incurred by you as the insured solely as a result of fraudulent infiltration and manipulation of your telephone system. So, if you want, um, they basically gain access to your telephone system basically for the purpose of being able to use your long distance service. This is something we're not seeing very much of in practice today, but about 15 years ago, this was happening to hospitals almost on a monthly basis, that there were so many schemes of trying to infiltrate phone systems. So, how can you help prevent fund transfer fraud or telephone fraud? You really can't, because you really are the victim of these two types of cyber deception. Of course, you can monitor your bank account for suspicious funds transfers and monitor your telephone bill for unusual long distance charges. If you should see either of these, uh, just know that you can certainly make an incident report on the situation under your cyber policy. Speaking of that, let's talk about how you notify of a potential cyber incident. It's like any other incident that you're reporting to TMLT claims. You have the notification, typically it's by a phone call to our claims department. At that point is when things are a little bit different than your med mal claims. TMLT uses AmTrust claims to handle our cyber claims. So the next step is typically you would receive a call from AmTrust. They will potentially either ask you for additional documentation, send you a confirmation letter, or a coverage denial letter. It is AmTrust's responsibility to to investigate claims, assign a cyber coach or a an attorney, and involve forensics and other resources as necessary. It is an essential requirement that you file a cyber incident within 60 days of, of the event. In reality, you want to file it as soon as possible because you want to start getting those additional resources so that you can potentially uh, look at the the claims or get help with handling the claim or the situation. One additional thing I'd just like to point out is on September 1st, a new law goes into effect in Texas, which requires businesses doing business in Texas a uh, to notify the Texas Attorney General in certain circumstances of of cyber incidents or security breaches within 30 days. Now, I can tell you that if it is a large incident, in 30 days, you barely know who all is involved, much less be ready to file an incident with the Attorney General or some other enforcement agency. Unlike HIPAA, that you have up to 60 days to make that same notification. So again, the sooner you can file the claim, or the incident, the better. So just a couple of general pieces of information about cyber insurance. Early on, Tony covered the two major types of coverage that occur under your cyber policy, both coverage for the insured or your direct loss and coverage for claims brought against you. These are coverages under the endorsement or the embedded coverage with your TMLT, LSA, medical professional liability insurance, as well as these are the two broad categories of coverage on what is called a higher limits or a buy-up policy. TMLT has worked with AmTrust to develop a policy that has higher limits that is available only to TMLT and LSA policyholders. It works seamlessly with the embedded coverage. What that means is if you had coverage on the embedded coverage and you met your deductible, if it was a very large claim and it went in, or a larger claim and it went beyond the $100,000 in coverage, then the higher limits policy, a totally separate policy, would become effective. And that deductible amount would actually transfer to the transfer to the higher limits policy. So you're basically only paying one deductible on two separate policies. You can request a variety of different coverage limits. Most commonly, we see $1 million as the coverage requested for medical practices. Requests of more than $1 million do require an additional application process because the cyber underwriters want to take a very careful look at your security measures. If you'd like more information on the higher limits policy available as a TMLT or LSA policyholder, You can either contact cyber@tmlt.org or contact your broker. TMLT created Barton Oaks Insurance Services as a wholly owned entity of TMLT, and it is an authorized agency of AmTrust to sell the higher limits policy. Both Tony and I are agents of Barton Oaks Insurance Services. So if you are interested in higher limits, our communication with you after the initial request is going to be using our Barton Oaks Insurance Services email addresses. So this is just a real quick comparison of the coverages that between the endorsed or embedded coverage of $100,000 that Tony reviewed early on in the webinar and the higher limits policy as well as the combined limits. So if you take the example of a ransom payment, under the embedded coverage, you would have $100,000 in coverage available for the ransom payment. With the higher limits of, for this example, $1 million in coverage, the coverage for ransom payment is sublimited to $500,000. If you have both the embedded and the higher limits policy, you would have a combined coverage of $600,000. You can also see that things like bricking cost, business interruption from suppliers, and cryptojacking have no coverage under the endorsed or embedded coverage, but there is coverage on the higher limits. Tony and I could talk all day about cyber insurance, and everyone has specific questions probably about their cyber insurance. One thing to know is you can always reach out to us at cyber@tmlt.org or by calling the main TMLT phone number. We've also listed both our TMLT email addresses and our Barton Oaks Insurance Services email addresses on this slide. One thing to remember is that cyber insurance is not standard. So if you are comparing cyber insurance policies, terms are going to be different. And so if you ever have questions, we're more than happy to answer those. We'd like to thank you for joining the webinar today. A copy of the presentation and resources may be downloaded from the file pods below, or if you're listening to this as a recording, you can certainly email us at cyber@tmlt.org if you would like a copy of those. CME is not available for today's webinar, and we just wanted to remind you of that. I think that it's an interesting statistic that our final poll brought up is that 64% of the respondents have received a fraudulent instruction email in the past. We thank you for joining today and invite you to certainly reach out to us at any time if you have questions about cyber insurance. Thanks and have a great afternoon.